What a time to be alive. Markets are finally exciting again. No more consolidation, no more accumulation, things bouncing all over the place. As yesterday's guest, Matty Greenspan, pointed out, this has actually been the best January besides 2013 for crypto markets, up on average about 35% since the beginning of the year, just 25 days ago. But now that we've had this move up, there's a lot of argument on both sides for why it could continue up or it could be hanging off the edge of the cliff, ready to fall off, especially as we see stocks like Microsoft start to come in reporting poor earnings and seeing them fall dramatically. I've got an expert trader here with me today. I can't wait to talk with him. I've got Dirk. He is from PrimeXBT, but much more than that, has been trading these markets both institutionally and individually for decades. One of my favorite people to talk about markets with, Alpha for days. You guys don't want to miss this. Let's go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of All Streets. Before we get started, please subscribe to the channel and lightly river dance on the like button. Can you imagine trying to use your toes to hit the like button? Like Michael Flatley. You have to be very light on your toes. Guys, as I said, a very exciting time right now in markets. Bitcoin still holding that 22,500 area, but Ethereum, predictably, fell a bit off a cliff. As you know, I was actually short Ethereum. I made some money, but man, I did not hold on for the big move, which was my original intention. It happens to the best of us. But interesting to see Ethereum sort of dipping before Bitcoin. But I think personally that we should still continue to see a bit of retracement, which I've been somewhat talking about for the last few days. As you've noticed, we're talking about trading a lot more on the channel again, which is a lot of fun. That was the original sort of core concept of what we did here. I used to chart every single day, and we're getting back into that, sort of moving Wednesdays into that direction and not just Tuesdays. As you guys know, we are sponsored by PrimeXBT, but there's really no reason to talk about that so much today because I have the king of PrimeXBT Academy himself, Dirk Hartig, joining us today. Dirk, how are you, man?
Thank you, king of the academy. That's a nice thing to introduce me. Thanks for having me here. Pleasure to talk to you today and share a couple of things trading wise and what we can expect the next weeks and months.
So listen, as I mentioned, Dirk is an expert. He's been doing this for decades. He's traded for institutions. He's traded his own book and then ended up as an educator, which I think is the probably, not to diminish any of your other accomplishments, but I think that if we're all going to come out publicly, education needs to be the focus on what we're doing. Can you talk a bit how, first, before we dive into the markets, how you ended up sort of focusing on education and why you chose to do it there and what kind of content you guys are providing?
Sure. Yeah, my pleasure. So, yeah, as you said, I've been doing this trading for quite a long time. To be more precise, this is my 25th year this year. I've been active on the market, started my career in 1998. And back then, .com bubble, or actually when I started, it was still an aspiring market. And I started out as a stock trader. So I'm still used to, when I learned the whole profession, standing on the trading floor and throwing all those weird hand signs back and forth to do business. You don't see that nowadays anymore. Later on, I specialized in forex options, which is one of the main instruments I'm still trading nowadays as well. And in 2017, I added cryptocurrencies also to my portfolio. Actually, I started like touching base with cryptocurrencies already earlier in 2014 when I was head of trading for a family office in Singapore. But that really was just touch base because I remember I always went to work and went by a crypto ATM, Bitcoin ATM. And being in my banking mindset, I always thought like, who buys something like this? This is stupid. This is dumb. Joke was on me. I missed out on a lot of appreciation on Bitcoin, not only Bitcoin, Ethereum, obviously too. Later on, 2017, I dove down the rabbit hole, and as everybody or almost everybody who does that, I never came out again. So I added cryptocurrencies to my trading sheet. in 2019, then I decided I don't want to focus so much on earning money for other people, my employers, anymore. So I started trading my own portfolio. I have never regretted that move. This is also still my main profession. And some parts of my portfolio I was trading with PrimeXBT, especially cryptocurrencies. And actually, PrimeXBT approached me then and said, you know what, you have been doing this quite successfully with us. How about you teach our clients how to do that? So we don't have so many people who start with trading and end up losing money and being frustrated, when in reality, maybe this is a good extra income they can do. And I said, this is kind of a dream come true, actually, for a lot of people, me included. You get to talk all day about what you love doing. I mean, who can say that, no? And I started that roughly 2 years ago, the PrimeXBT Trading Academy, and never regretted that step on adding that onto my workload as a trader.
Yeah, absolutely love it. So do you want to dive into the market? Or I know you have your screen shared, and you, I think, take the approach that's a very smart one right now, and you kind of start with the macro, right? When putting context on these markets. I'm going to go ahead.
Absolutely, no, really, I think like that's like one of the first things I try to teach for new traders, because everybody out there is always looking for this holy grail indicator. I want this indicator that is always right, that earns me basically money overnight, where I can just stay in bed all day or do whatever, and it's just automatically earning money. And something like this sadly doesn't exist. The markets are chaotic. So you need to put in some work into it. And my approach here is to do it in a top-down way. So look at the macroeconomics first, and then, kind of funnel yourself down until you end up, if you want that, maybe on a 5-minute or 1-minute charts, if you're into scalping. Because it's always important to have the big picture that you are kind of following on every time frame. And I think it's at the moment really an interesting time we are seeing there in the S&P 500, or actually in all risk-on markets. Risk-on markets meaning markets that investors flock to when they are looking for more return or more return on their investment in return for taking higher risk. And that is primarily the stock markets and the cryptocurrency markets. And so I want to start out first of showing you something like this. No, that's the wrong chart. This one here. This is the S&P 500. So the largest stock index, the most important stock index in the world, in comparison to Bitcoin. The orange line here being Bitcoin, the blue line being the S&P 500. And the important message here is, what you can see is, in this downtrend we have now been having since late November in 2021, Bitcoin basically has just been copying what the S&P 500 is doing. So there's a high correlation between the stock market here and Bitcoin. So that means, like, doing like technical analysis in a bear market, at least long term, or on a daily chart on Bitcoin in this period doesn't really make sense. You have to do the technical analysis maybe on the S&P 500, and then you can deduct from this what Bitcoin is going to do. And what is really interesting, in my opinion, here now is that lately Bitcoin has detaching itself a little bit from the S&P. Of course, there was still an up move in both assets, but the better, so Bitcoin has been moving much more than the S&P 500. So we have seen Bitcoin and Ethereum appreciating by over 30%, or nearly 30%, whereas we didn't see quite that move in the S&P 500. Still a strong move, but not to that extent. And that's kind of interesting, because normally you just see that in a bear market, that whenever the S&P 500 went down, Bitcoin would go down by quite more. So this is the first indication that maybe we are seeing a change in the market structure. And this change in the market structure, I've been talking about this actually for months now, because of, and if I have to summarize it, I really just need to show this chart. If we compare how in the past the stock market acted in a high inflation environment, And a high inflation environment here I have defined as whenever inflation was higher than 6% in the past. So this chart goes, back like 100 years, more than 100 years actually, until 1912. And I started marking here these events since 42. So whenever we saw the inflation rate, this is the yellow line here, going above 6%, and then started to come down, this coincided very precisely with a low in the stock markets. So if you follow the red lines here, you can see almost always this was, it's kind of eerie actually, the low in the stock market. And as traders, you kind of always, of course, are looking for patterns in the market. You like to see something like history repeating itself. So of course, I'm asking myself now, is history repeating itself? So if that is true, and as I said, I talked about this since September 2022. I said this pretty much should be the low of the stock market now. And up to now, I've been right. I think we are inbound for seeing the stock markets rise again. And stock markets rising would automatically also mean cryptocurrencies rising again. I think you have a question.
Yeah, well, I love the bullish outlook. I tend to agree that things have bottomed. And then, so the next question obviously leads to Bitcoin. In the past, if we've seen this major, and by the way, that's a long-term view, right? So that's not you saying things can't go down this week, right? Because
no. That's why I say we have to go from the top, from the high time frames.
Just make it clear for people.
To see that's a monthly chart you are seeing here. Yeah, absolutely.
So actually, you know what? Before we dive into Bitcoin, how would you actually then trade this?
So at the moment, this long chart is something you don't need to take action immediately. I've been taking action on this since September because I always said, I'm building up my risk on assets again, primarily cryptocurrencies and Bitcoin. And it's paying off now already. So if we look now at more the short time frames, we have a very interesting setup here also in the S&P 500 on the stock market.
The line.
The line, really. Everybody's talking about this line, right? Because it's like the top definition or the textbook definition of a downtrend we have been seeing, lower highs, lower lows. And now for the 1, 2, 3, fourth time, we are somehow trying to break out here. And it seems mundane to a certain extent, I'll admit that. But setups like this always are also offer the best risk-reward ratio. Because what you can do here is you can say now, or the setup normally what you'll see is that markets break out. And the important thing is that we close above this trend line, which we did. And then they come back to one more test. What was formerly the resistance is now is support. So and we are right now exactly at that area where we are doing this test. So the smart thing from a risk-reward ratio, at least, like just purely statistic now would be, hey, go long here and place a stop loss, somewhere down here, maybe at 3,900, maybe at 3,880. Because that gives you a big risk-reward ratio. Because if we are going to bounce off here now, the market is probably going to run all the way up here to 4,300, maybe 4,400. So you can earn like 3 or 4 times of what you're risking. And these are exactly the setups you want to look for as a trader, because that means you only need to be correct like in 33 or 35% of all the time, and you're still going to end up earning money. And this is like, since we're live, we can actually do this, need to transfer some money here on the account. And then we're just going to take this trade. We need to put our money where our mouth is, right? Okay, let's go here. Let's go to trade. So I'm right now obviously on the PrimeXBT trading platform. I'm going to buy 50 pieces of the S&P 500, meaning like every point up or down is $50 plus or minus. And then let's see how that will play out over the course of the next days and weeks. And so this is extremely nice trade when it comes a short-term trade when it comes to risk-reward ratio, in my opinion. And and now we can of course go on and see what that probably would mean for Bitcoin. But
It's interesting. I have, I obviously, I chart the SPY when I'm looking at, because it's just the way that I've always traded the S&P. And I also use logarithmic charts. I'm not sure if you use log or linear. I can't really see there.
on this one, not no.
Yeah.
On Bitcoin, I mean, you have to.
It's interesting though, when you look at log on the S&P, it still hasn't actually broken out. But everyone is watching the line that you are and sees the breakout, to be fair. But what I actually found interesting as well is if you look at the weekly on the SPY, that rejection was pretty predictable there. That's the 50 MA on the weekly, which, it hasn't traded above basically in a year. So I would have expected that little resistance. And now I think we're actually going to break it. I think that this will be the time.
I mean, let's see. I think a lot is going to depend also on next week, Wednesday, when we have the next US interest rate decision. And the markets are driven not so much by technicals at the moment, in my opinion. They're mainly driven by fundamentals, which is the fundamentals are US inflation data, which is ticking in the right direction for sure. And of course, interest rate decisions. And we are largely going to be dependent on whether we are seeing a 25 basis point hike next week, Wednesday, or 50 basis points. And of course, then what Mr. Jerome Powell is going to tell us half hour after the decision. It's like there some sort of scenario, down the road where potentially interest rates could go down again. My opinion, we're going to see this if there's no black swan event around the corner, like the war between Ukraine and Russia escalating, of course, maybe in Q3 or Q4. And so, of course, it could very well also be that we bounce off first and, we kind of do the extra round. No, that's not what I wanted here. Like go down first again, maybe to here, and then break out later this year. Very well, but for me as a trader, it's I'm not so about. I look for trading setups that have a good risk-reward ratio. And if I see something like where I potentially can earn 3 or 4 times the amount I risk, I will take this trade every day because I have a much, much better probability than playing roulette, for example, and betting on black or red, right?
Absolutely. And it eliminates all of the bias. It's a very simple mathematical formula.
Exactly. Yeah.
So let's dive into Bitcoin then, because if we believe that the S&P has bottomed, which we both do, we obviously believe that Bitcoin is bottomed.
Yeah.
I'm assuming. In fact, I say it over and over again. I thought Bitcoin had bottomed, last summer when it dropped down into the 17s. And then we got FTX'd. Right. And so I think that we had sort of a manufactured bottom in the 15,000s that we wouldn't have had if not for that Black Swan event. And I think that is defensible position now that we've seen that entire move retraced.
Yeah, in hindsight, of course, we are all smarter always,
We're very smart. I thought so at the time as well. But so how are you trading Bitcoin right now? I mean, I sort of mentioned that in the short term, my feeling was that we're massively overbought. And maybe we get a bit of retracement. But I think that for me, now it's not short the rip, it's buy the dip. Like if we get a nice big retracement, we buy it, assuming that the bottom is in and that we can rise throughout the year.
Yeah, and in general, totally agree with you. But let me maybe put that first. I remember still I was actually doing a video like in autumn, like why you should buy Bitcoin now, and this probably is the bottom. And that was just a couple of days before FTX happened. This is what I mean by black swans. Nobody can predict something like this. At least I cannot. If you can, please get in touch with me. I'll
send you my crystal ball.
Drown you in money
overnight
for that type of information. And but I mean, again, let's see. Let's start maybe here with a long-term picture. And the long-term picture here is we can see, look at fractals of what happened before the last halvings, precisely the halvings of 2016 and 2020. And before that, we usually had the market low roughly 18 months before the halving. Next halving is going to be late March, early April 2024. So just shy above a year from now. And you can actually always see here that there's some kind of accumulation phase taking place. This again is a monthly chart. I know I'm boring you with monthly charts, but it's
oh no, I show the same one all the time, but on the weekly.
Understand the whole picture, and what is characteristic about phases like this, especially the one prior to 2020, is that you usually have like big swings up, and then you have like kind of the price is tickling down again. What is important is that if we see kind of the same movements that we saw before, we should end up somewhere between 40 and 58,000 US dollars at the halving in 2024. So putting this whole pump we are seeing right now into perspective, it's of course just a minor move. It also could mean that we are, like going crazy, going all the way up here to 40 just to dump down then to 15,800 or 16 or 17,000. It's all possible. We've seen that after the last peak in 2017. We've seen that in 2019 happening, something like this. Go up to 14,000, come back to 3,000 because of Corona, when Corona started, that is. So that is possible. On the short-term picture, however, so what I see, and it's actually interesting that you sell, because I've just gotten a sell signal here from my trading system that I use. We are massively overbought. So
we were sitting at 90 RSI for days here, and now showing bearish divergence on the last little move.
Exactly.
We all have our strategies, but that's mine.
Yeah, that's exactly. It's like everything pointing into the same direction. So normally what I would expect, and I'm taking into account here those wicks we are seeing. We are seeing those here. We are seeing those here. This is normally from my experience. So I don't have like data on it. This is really just experience based, 25 years of experience. This shows actually the market wants to go higher, but it's kind of lacking power to do so. Yep. In this case, it found the power. So with this amazing candle going up here again, and I think it was on the weekend that this happened in a low liquidity
a lot of
environment.
Action on the weekends,
yeah. And so normally what we should see now is first a leg down again to test this fractal again.
Yep.
So somewhere between 20 and 21,600, 22,000.
Yeah, I just real quick, I have it at 21,473. Yeah. This red line right here, just to come back and retest that. There's that bearish divergence I was talking about. Although that could end up being a hidden bullish divergence if we get any more further retracement. But
that's the thing about oscillators like the RSI. Of course, once markets start trending, they're kind of difficult to use. Yeah. I'm a big fan of the RSI, by the way, as well. I
only literally use it for divergence and to give me a general confluence for the idea of whether we're looking at maybe. When you start to hit 90, the only time we were above 90 sustained was the top of 2017 when it hit 94. So
that's the thing, it's kind of like, okay, maybe I should. If I'm like really, really in the positive numbers with my position, at least, get my stop loss somewhere where I don't lose money anymore.
Exactly.
And so normally what you would see is like things going down now first again into this fractal again. And then if, the FOMO kicks in, then we should go above that. And I tell you one thing here. If we zoom out, and need to do the auto here. So if we zoom out again, there is this zone here of between basically 28 and 30,000, and I can guarantee you, if we break over this top here at, let's say, 23,500 US dollars, and we move all the way to 28,000, then the FOMO is really going to kick in. Then you'll have you'll have your neighbor, your mama, your papa, your girlfriend, your boyfriend.
They'll be calling it dirty.
Hey, should I buy Bitcoin right now? And which then is, of course, the indication to get the heck out of it.
Yeah, I was gonna say, that's when we short. You can see literally I have that red zone with an arrow pointing into it.
Yeah,
that's exactly same.
It's the most likely thing that's going to happen. And now again, of course, just because it's the most likely thing, it doesn't need to be. But as a trader, this is your job. You kind of have to make up and come up with scenarios and how you want to trade them. Because trading is a business. It's not gambling. Although a lot of beginner traders especially treat it as gambling. But it's a business. And if you run a business, you're selling shoes, and you ordered maybe a model where you think like your customers are going to go crazy and want to buy it, and it ends up being like a model nobody wants to buy. What are you going to do? Are you going to order more for a lower price in the hopes to break even? Probably no. That would be pretty dumb, right? But somehow when it comes to trading, people tend to do that. Oh, I'm wrong, so I'm going to move my break even more in my direction to build up more position. Don't do that. Come up with scenarios like this one, like Scott also did. And by coincidence, we didn't talk about this before. We have kind of the same scenario here. And then you come up with a trading plan. How do you want to trade this? Where do you put your stop loss? Where do you put your take profit?
Sorry, first of all, I want to talk about that specifically, but what are the green and red bars at the bottom of your chart? What's the indicator? I just can't.
It's a custom indicator I call danger zone. So whenever this turns bright red, that means like that, I should look out for local highs where the market is going to reverse. It doesn't mean like the market is going to reverse immediately, but I'm looking for exits when I'm long.
Yeah. Okay, so are you actually actively trading Bitcoin right now?
I am, of course, yeah. So as an investor, I'm like long anyway, and I just took profits on a long position actually, around 23,000 here from a swing trade, and now I'm looking to re-enter somewhere in this area between 20 and 21,800.
Exactly. You're not actively shorting this here.
No, I'm not shorting it. Because I think if like I did this before in years, and I learned my lesson, because once Bitcoin goes rolling to the upside, you're going to get burned. And we saw that, no? If you look like
you have to be perfect.
The liquidations that we saw in long positions, actually that is what fueled all this craziness we saw in those green bars. It was largely fueled by liquidations of short positions people had. And like liquidation is always like you're at a party in a small apartment, a fire breaks out, and everybody wants to run out of the only door that is in that apartment, with the effect that nobody's getting out and everybody's getting burned. Sorry, it's a bit morbid, of course, that comparison, but it's a bit like this, or everybody's trying to get out of a parking lot at the same time.
Yeah, I mean, if you even zoom out on that concept, I was on a Miss Teen Crypto show yesterday, and she concluded, she said, "Are the bulls or the bears going to win?" And my response was, the bulls literally always win.
It is
trend up.
Yeah.
Bears can win if they're perfect in a very short period of time, but over time you have to time it perfectly to be effectively bearish. And if you can literally just buy and wait long enough, you'll always win if you're a bull.
You know what? To be honest, between you and me and everybody watching out there, obviously, it's like why I always have to not laugh, but internally laugh a little bit about all those doom prophecies we see out there. The market is going to crash like crazy.
Never
recession.
Happens. Yeah.
You're going to be right eventually, like once in 10 years. But that means the other 9 years you have missed out on alpha. So it's never a good idea and risk on markets to only be a bear. I learned this the hard way, by the way. That cost me a lot of money until I got that insight.
I think we've all learned it. I think we've all learned it the hard way. I think that it's very clear that everyone's learned that the hard way. If you look at March 2020, obviously when markets notoriously bottomed, and you look at I was reviewing it the other day. I don't have the exact numbers, but hedge fund performance in April of 2020 and May 2020 was historically bad in a market that rose faster than any market in history. And literally all you had to do was do nothing or have exposure to make money, because for the same exact reason we're talking about, they remained bearish and refused to admit that the market had bounced and lost just billions and billions of dollars when literally all you had to do was nothing and hold on to your positions.
Yeah, exactly. And I mean, if your name isn't Michael Burry, you're probably not going to do that and be profitable with it long term.
So is there anything else specifically that you're watching here at the moment? Or are we kind of like, I mean, it sounds like I think you're just waiting kind of for the opportunity.
Sums it up. What I'm doing now is I'm waiting for what we are going to see next Wednesday in terms of interest rate decision. Not only the interest rate decision itself, I think the important message is going to be half hour after this, what Jerome Powell has got to say. And if there's any indication of that, oh, inflation is coming down, things are not as bad anymore as we expected, then we are going to see the markets boom. If we see by any chance a rise
50 bips.
of 50, and Jerome Powell saying something like, we are still determined to fight inflation, we are going to raise interest rates until for eternity. I'm exaggerating now, of course. Then the market is going to tank. So once again, we have a situation here where technical analysis is only going to get you so far. It's going to be dependent largely on really what the Federal Reserve Bank is going to say next week, Wednesday. It's exciting, and I cannot remember a situation since 2008, to be honest, when we had the financial crisis, where the market was eyeing really the central banks so much like we're doing right now.
Yeah, it really is interesting. I mean, you look at some of these coins. I'm looking at ETH, just happened to be looking at ETH because it was what I was watching for that short. I mean, you had major bearish divergence from here to here to here. You had a small one, but it's already down to oversold, right? So for me, like this, probably maybe we sell off a bit more. Now I'm just going to watch for some bullish divergence here. And look to get long, like you said, which maybe that drops us, down another 1,000 on Bitcoin and another. My original target here was like 1420. Maybe we get there. And then, but a move this small, sending it already to oversold means to me that
that's crazy. No, I mean, that's like
there's a lot of strength in the market. Usually to go from being 87 RSI all the way down to 30 should make a much more significant move in price.
And it's probably going like I said, like next week Wednesday, all haywire again. It's going to mess up our readings on the RSI, on the stochastics, and everything.
Yeah, it's gonna
maybe one more thing, to kind of wrap up things. In my opinion, is I've been talking about this on my channel a lot. One thing I would like to see, because this is what every bull market is so far in cryptocurrencies and Bitcoin has been initiated in, is that Bitcoin dominance goes somewhere to 46 to 50%. And also this is, you see the arrow here. I actually painted the arrow when I talked about this the first time. That was end of September. So also you had been, I was very patiently, because this was kind of the last puzzle piece I wanted to click in. And finally, we are seeing the surge up. So maybe really this is the last puzzle piece. However, be prepared for volatile movements, at least in Q1 and Q2. And until, everybody's going to FOMO in again, you want to be cautious. And like Scott just said, look at the indicators. We are heavily overbought. So be prepared at least for a drawback to, let's say in Bitcoin, 20,000 or something. And by all means, this is like a 10 or 15% draw back already. That's a lot, just because it's crypto, it doesn't feel like so much.
Yeah, absolutely. Well, listen, I'll take any bullish movement we can get. So for everybody, as far as like actually finding what Dirk's doing. So obviously there's a link to PrimeXBT down below. We're constantly scrolling here. Just go use that link, sign up. And I assume, I've been told, I know once you get there, that will lead you to all of the educational content that you have, correct?
Yeah, it's like, I think below here there's a link to the YouTube channel, PrimeXBT Trading Academy. Just click on there, drop by, watch some videos if you like, and you'll find everything else you need there. Also the descriptions of the video.
So Dirk, I don't want to put you on the spot. But I can see in the comments that you've basically been the favorite guest that we've had. Everybody loves, really, people are, because
thank you.
Honestly, so, we do macro on Mondays. That's not really actionable, on Tuesdays, we have a lot of traders, but more so we've just kind of gone over charts and talked about what we would do, but you actually just did it, which is not something that we do on this channel very often. I want to have you back a lot more. But I don't
would be my pleasure, really.
But I don't know if you're too busy for that. But I have to ask you publicly so that you can't say no.
No, I cannot say no, and I won't say no. I think that's more important. Obviously, like I said in the beginning, I'm so happy. I get to do for profession what I love, and I get to talk about it. That's like the magic triangle of doing things.
Yeah, we got John English saying Captain Dirk. We got let's do this regularly. What's the name? His name is Dirk. It's right there on the bottom. If you guys didn't see it, Dirk Hartig. Yeah, Scott has the best guess always. Yes, come back. See, I mean, they love you. So
thank you so much, guys. Really appreciate it.
That means you've earned yourself a permanent spot here. So really appreciate it, man.
Awesome.
Awesome. So I'm gonna obviously let you guys go. Let Dirk go. That you kind of blew my mind, man. Really, it was nice to see it aligning, but it was also nice to see you put it to action. And I think that's really useful. So guys, of course, go down and sign up PrimeXBT, and then you can check out everything Dirk has educationally there as well. Tomorrow, we're only doing a half hour of the roundtable tomorrow morning, so I have to travel, but I've got Anthony Scaramucci, which should be epic, and Richard Byworth. So we're just doing 2 guests because we're only going to have 30 minutes. That will be epic. Guys, go follow Dirk and Prime and the Academy, and go check out everything on YouTube. Seriously, guys, if you want to learn, this is your guy. This is your guy. So please follow him. Otherwise, I will see all of you tomorrow. Thank you so much once again, Dirk. That was really awesome.
Thank you for having me. Take care, everybody.
Bye, guys.
That's dope.